Nervous about the volatility of public markets? Looking to invest in Canadian real estate but not finding the right opportunities? Neighborhood Holdings may be an option. Nearly 10 years of consistent performance, Neighborhood aims to provide stable income while preserving invested capital, target net yield above 8%. At the heart of the strategy is Neighborhood's mortgage product portfolio of first position 100% residential mortgages across Canada with an average loan to value under 55%. Neighborhood partners with mortgage brokers and financial institutions to support quality borrowers in transition who may not currently qualify for traditional financing and have a temporary need for capital. Neighborhood's portfolio has no exposure to commercial, construction, or bare land properties, is geographically diversified across major urban and suburban centers in Canada. Check out the links in the description or visit neighborhoodholdings.com to view the offering memorandum for investors and advisors or to explore mortgage broker partnership opportunities. This is not advice. Please consult a professional advisor before investing a loonie in any of these investments. Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a loonie in any of these financial markets.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin.
Hey, there's a bubble.
Welcome back to the Loonie Hour, episode 212. As always, joined by the three amigos, Boomer over in Halifax, Rich Diaz, Montreal. What's going on, Rich?
Back home.
How's the art wall coming? Looks like it's
the
been
art wall
dismantled.
is going very badly, but on the other part of the flat, the art's coming up really well. So we're moving. We're slowly getting back. It's taken me 2 months, which is very bad. But we've been traveling. We were in British Columbia. Thank you to everyone who came out to see us.
You should just get one of those Samsung frame TVs, and then the art changes every 30 seconds.
Yeah, maybe. But wait. I want to give a shout out to a couple. I'm not sure if they want me to say their name, but I was in the airport on my way back from Victoria because I went to go see my buddy out there. And I stumbled across a couple from Red Deer, Alberta, actually. And which is hilarious. They were actually watching the Loonie Hour episode that we had done in Vancouver on their phones together. And he said hello, and I'll say his name. His name is Ryan from Red Deer, and he was lovely with his wife. And yeah, it was great. We just had a chat. They were just really pleased to meet me. I was pleased to meet them. And it was just funny because, yeah, it was just great. It was
Our two fans from Red Deer. I was really hoping his name was going to be Rick.
Yeah,
Rick
no.
Red Deer.
But Ryan's pretty close. So hello, Ryan and Ashley from Red Deer. Thanks for supporting the Loonie Hour.
Boomer, any good stories?
That's pretty spectacular. It is Halloween week. You're watching TV and the TV walks by you.
That's it. That's what happened.
Keith, does your neighborhood get good turnouts or what?
Yeah, it's pretty good. Yeah, we have a great neighborhood for Halloween stuff. So it is Halloween week, and
Just
my
close your
body.
gates?
Well, my body's a temple, right? So I'm always watching what I eat and everything all the time. But when Mrs. Icecap buys the big box of the little tiny chocolate bars, which ones you give out for Halloween.
Mm-hmm.
I find them, of course, and I broke one open and I just dug into the Twix bars. I'm into the Twix bars this season. Anyway, I get this thing going. Miss Icecap comes home and she sees the box open and Twix wrappers everywhere. She loses her shit. What are you doing? The candy's for the children. You're going to get fat.
Close the gates.
And I'm like, oh no. So she hides the box, of course. I go back and they're gone the next day. I said, I'm going to find these guys. Guess what?
You found it.
Oh, yeah, of course. There's not one Twix bar. Any kid comes to my house looking for a little tiny Twix bar.
Dude, you just got to turn off the lights.
No,
turn the lights off.
Halloween is fun.
Halloween is fun.
Yeah. And one of the big things in our neighborhood, when our kids were younger, we go around, the parents go around with like a coffee cup, basically. But, it's for wine. So every house you go to, your neighbor just keep filling up your cup the whole way.
That's scandalous. Anyway.
Yeah. So, Steve, a boring week. Nothing's happened in the last few days.
Week. Yeah, lots to Bank of Canada Fed, Bill Gates, Doug Ford, David Eby, Richmond land stuff going on. So that's just so much to talk about. But
Yeah, we had a great live event in Vancouver last week. A couple hundred people came out. Appreciate everyone for the support. But most importantly, want to thank the sponsors once again, Neighborhood Holdings, who's been, with us for quite a while now, has been a tremendous supporter of the show. And rentals.ca was involved there as well. So appreciate that. But speaking of Neighborhood Holdings, we had an interesting housing panel with them. I think it was recorded for Dan and Nick's real estate pod, but didn't obviously make our Loonie Hour pod for those that were listening. But there was an interesting conversation that we had around the whole Richmond Cowichan First Nations sort of land dispute, which is effectively, again, just to recap, is the BC Supreme Court said, listen, the Cowichan First Nations fished on this land 150 years ago. There's no treaty, so their title can coexist. It can coexist with everyone's fee simple private property rights. And so this is creating this question mark, right? As a lender, how can you have two titles? You cannot. And this is the dispute that I'm getting engaged with people online. They don't really understand sort of legal lingo, and then there's sort of reality or practicality, which is if you go into the bank today and say, hey, I'd like to get a mortgage, and by the way, I co-share my title with the First Nations, let me know what they say, which is to say you're not going to get a loan. And that
actually they might like it these days. The banks are into that stuff.
Yeah, no collateral, just throw it down. Yeah, so it was the conversation we had with Neighborhood Holdings was effectively what is your guys' position? A $700 million loan book, one of the largest private lenders in the province of BC. And he's like, yeah, we won't lend against it. We don't know what our collateral is. We don't know what the security is. At some point, there's going to have to be something hashed out in the courts. Whether it becomes truly First Nations and you lease the land, or there's a buyout, or something will have to get resolved. But until it does, effectively their stance was this is not financeable. And I've been kind of making some calls around with several of the banks, and the answer that I'm getting at the moment is we don't have a concrete policy officially, but unofficially it's no new mortgages on those lands, unlikely to be refinanceable. They'll likely renew just because it's a brand reputation thing. They just want to they don't want to renege somebody's mortgage. But effectively what I'm saying is if you now have, and this is the big thing, it was people I think are missing the point. Until these disputes get clarified, which is likely to take a few years, banks effectively aren't going to issue mortgages on those properties, which makes them illiquid. You cannot sell these properties. No one's going to come in and buy land that is nobody knows what's happening with the title and who truly owns it and what that structure is going to look like. And so, yeah, I mean, I just think about the senior that, there's an estate sale and they want to move on with their lives, or the family that has outgrown their space and wants to upsize is effectively stuck where they are until this issue ultimately gets resolved. And it will get resolved, but it's not going to happen in a week or two. It's going to take a couple of years.
So, Steve, how does it get resolved? Because I would imagine one side now, they have become incentivized to, the indigenous groups. They want to, I don't know, keep the land, or they do want to have title or co-title. So I imagine they're going to have very good representation versus the other side, which I have good representation. So how does this play out in the end?
In the end, I think it's going to be the government's effectively going to have to negotiate with them, and they're going to have to basically pay them off. So I don't know what that looks like and how long that takes, but that's the most likely scenario. Or you could have a scenario where, for example, actually where I used to grow up in Tsawwassen, there's the Tsawwassen First Nations land, which is it's their land, but they have a template where they structure, and then they have a 99-year lease. So you can go buy real estate on that property, and there's a lease. There's a head lease document that says, we guarantee this lease for 99 years, and you basically lease the property off of the Tsawwassen First Nations. And the banks don't have any issues with that land. because they know they have a treaty in place. They have a head lease in place that says 99-year lease. So the bank is comfortable lending mortgages in that environment. But like I said, the challenge today is we don't know what that structure is. What does the treaty look like? If there is a head lease, what does that head lease look like? Or does the government simply just buy them out and it becomes fee simple? Now, the question is, of course, about 90% of land in BC is unceded territory, which means like it just opens up. Someone's going to look at the Cowichan precedent and say, hey, well, we used to fish over there for 200 years. So like, why don't we make our claim? And so then does it put another parcel of land up for dispute? So I think it just sort of sets the precedent, like we saw this week, Rich, in Quebec. I think it was announced in the news yesterday that the First Nation lawsuit demanding Aboriginal title over lands in Western Quebec. So I think this is a trend. I think this is going to be the big, like there was a huge, so the Richmond mayor put out this letter to all of his constituents in the mail, basically saying, hey, there's a land dispute that could impact the title of your property. We're going to have a public hearing in Richmond. It was actually literally last night or 2 nights ago. And there's like, the room was sold out. I think it was 500 people, standing room only. And the media was all there. It was a gong show. It was a total gong show. People yelling at the mic and people.
What did Mike do? That's not fair to. So it sounds like a Blue Rodeo song at this point where we're going with it.
Yeah, I mean, no, I think it's huge. I think the point people are missing is basically like, yeah, this will get resolved. Like people aren't going to lose their homes, or they're not going to get kicked out of their house. They might get bought out. But the challenge I'm saying is between now and then, you have property that is losing value and is illiquid and is not refinanceable.
It just tells you that these woke shit, like, these land acknowledgements that seem like a good idea. I mean, I don't agree with it at all. I don't think you can, sins of the fathers to blame an entire generation for something that somebody did 400 years ago, in my view, is completely outrageous. But this is where the rubber meets the road. And I think that my 2 observations, one, I think there's going to be severe blowback. There always is. There are going to be some reactionaries who are going to say, you see, this is why we should have never done this, and blah, blah, blah. And I think I actually worry that this actually will put set relations back. That's something we should just keep sort of in the back of our head. But also, I just think fundamentally, it's just, it really speaks to the core of what's wrong with Canada, is that the government does things that sound good on the tin, but ultimately they don't think of the second order effects, which is, it's good and maybe important to acknowledge that there was a people who lived here for a long time ago, and that civilization was effectively wiped off the face of the earth. However, what good is it to today and tomorrow to basically reorient our entire society around land claims that may or may not be verified? So it's just, it's just a total mess. And I think it's gonna get worse in a sense, that because I think people are going to push back. There's going to be some people are going to use this as an excuse to be nasty, and I'm worried about that, to be honest.
So just to summarize, I know it's like in the Constitution, people talk about it like, well, hey, listen, like, we have to uphold, the law. And I understand that. It's obviously a touchy subject, but there was a really good article from basically, I'm just pulling it up here. It was from Jeff Moyse. I think I pronounced it right. And he had basically advised governments. He served as legal counsel on Indigenous law for the province of BC and advised 6 successive governments over more than 30 years. And he wrote an article this week saying, quote, as far as the public interest is in formerly public lands in Haida Gwaii, which was a little island, I think it was a little island just off of Vancouver, is concerned, it had been eradicated in the blink of an eye. Crown land ceases to exist where an Aboriginal title is declared under Section 35 of the Constitution Act 1982, all done with no public mandate or input from citizens at large. British Columbians should now be prepared for Premier Eby's template. which will roll into their part of the province. Unfortunately, you will know nothing about it until you suddenly discover secret government-to-government negotiations have resulted in the province rezoning Aboriginal title over what you thought was your private property or your publicly accessible provincial park.
Yeah, it's such a mess. If
So
you're a business,
where
if you're a
Aboriginal
company,
where Aboriginal title exists, it supersedes effectively Crown land. So like, you know, all these like parks, provincial parks, and you know, trails that you might use in theory could end up belonging to obviously Aboriginal title, and then they can say, hey, sorry, nobody's allowed in the park today. You know, we're using it. So I don't know. It's interesting. You know, I don't want to spend too much time on this. I just think that BC in particular, where again most of the land is unceded territory, these treaties have not been done. They have not happened. They will have to get worked out, and the governments are putting in place effectively policies that allow them to do private negotiations.
Huh. So I have a lot of non-Canadian friends or friend, and they text me or email me with this story, and they just can't understand and appreciate that it is happening. Again, it's one of these other. So you go back to a Steve, you mentioned, you know, you don't even know if you legally own title to that property, you can't sell it or trade it, whatever you want to do. And if the government continues to go down these roads, it just makes a lot. It's just another mark against Canada for foreign investors. And people say, "Oh, well, it's only this one little spot in, you know, southern British Columbia," and next thing you know, it just takes place. You know, it spreads elsewhere.
Well, isn't that what's
You
so
know,
hard, right, Rich, of like getting, you know, for example, like pipelines approved, right? It's like you have to go through so many you know, First Nations bands, municipalities, like there's so much like people that you need to appease to get these things built. It's the biggest story today in BC. So I know we have our audiences across Canada, but like in BC, it's like this is the number one discussion. So yeah, it's interesting. We'll keep an eye on it. Bank in Canada, Keith.
well, I am kind of peckish right now. There are no Twix bars left in the house, but I did correctly forecast what the Bank of Canada was going to do.
yeah,
As
real
did
heroic
Steve
call
as well. Yeah, one of us did not, however.
No, I did not.
You got your Twinkie, pal?
I've got even better than a Twinkie. I've got a
no, here we go.
pastéis nata, which, if you would know, speaking of being Portuguese, this is a custard cake. If Keith doesn't have to eat
this
Twinkies,
is no. Keith can do it because he's like 90 years old. This is not okay.
Come on, let me see. What do you got? What do you got?
It's called a pastéis nata, which, if you're familiar with Portuguese pastries, is delicious. It's I mean, it's absolutely horrible, and I regret that I have to eat it. No, they're great. So yeah, I got it wrong. Yeah, there you go. So I'm gonna eat
Okay,
this.
one
You guys
bite though.
carry on.
That's not a big thing, man. That's it. That's your one bite.
Yeah.
Huh. Okay.
Okay,
Two
walk
bites.
us
Finish
walk
it
us
up.
through the Bank of Canada. Boomer.
Let's go. What
Okay,
happened?
so so there's the Bank of Canada, they cut rates. Everyone on the planet except for the Portuguese cream puffed pastry eating rich got it wrong. But we're going to walk through, you know, exactly what happened. You know, the week before we talked about the Canadian inflation data point that came out, it was hawkish, which means it was sticky. Prices were still increasing. And back then we said, you know, this might give the Bank of Canada cover to not cut rates. And then, of course, we talked around that. We said, well, you know, there's another even bigger event coming out on November the 4th, which is the Canadian budget. And even though the Bank of Canada is supposed to be independent and separate from the fiscal side, yeah, I think if you think that, you should eat one of those patisseries as well. But no, but they cut. But we'll go back and forth. But the gist of it is with the Bank of Canada, if you read through their monetary policy report that came out, so much great conversation in that and detail and everything. We'll have more detail on it. but it's kind of weird. They say, on the one hand, inflation, we agree it's sticky, but it's within a range. And our long-term outlook, we don't see a recession because we will never forecast a recession, but clearly their forecast for growth over the next 2 years is very muted or muted, whatever word you want to use with it. And it's not a lot of not a lot of optimistic information. The only optimism from it is that they're saying, Canada, we're going to be okay. We're going to cut rates again if we need to, but we'll assess it, on a per meeting basis. But between the lines, I read a lot of different things. I know, Rich, you read some different things as well. But that was my first look with it.
My quick one is just so everyone in the world except for me knew that they were going to cut, so I acknowledge that mistake. But I think what was interesting to me was and again, maybe I'm just projecting my own views. But the sense that I got was that it was like a hawkish cut. So they cut interest rates, but they were basically saying that they were done for the time being. Of course, if things get materially worse on the growth front, I think that they'll backtrack on that. But in one sort of sentence, it was that monetary policy cannot fix the structural issues that Canada has, and I actually really appreciated Tiff Macklem saying that there are structural issues because of tariffs and the protectionism from the United States. There are structural issues with respect to productivity growth in Canada. And the problems that there are with respect to real estate markets in particular jurisdictions. And both Carolyn Rogers and Tiff Macklem went, I think, if you read between the lines, were basically saying that monetary policy cannot fix what ails Canada. And that's something I've talked a lot about on my personal channel and something we've talked about here. And so that was the takeaway that I got. It was a hawkish cut, which of course is a bit confusing, but I thought it was crystal clear that they don't think that monetary policy can solve all of Canada's problems, which I think is fair.
Well, yeah, they flagged structural damage, obviously highlighting rich productivity. That basically, I mean, he effectively said, like literally his words, that Canadians will probably have to accept a lower standard of living unless we can do things to change that, which he said monetary policy obviously can't fix, aka government is going to have to create a framework where the private sector can actually flourish.
I'm afraid that
I don't think it was a hawkish cut at all. I just think they're using the wrong word, Rich.
Okay, go ahead.
Yeah, it's like it was we're screwed cut. That's what it was. And what I mean, you are right. I mean, there are different kinds of inflation. Of course, we talked about that. Asset inflation, price inflation is not what you're paying for bread at the store or Twix bars. It's housing going up in price and things like that. But here they are again, when they cut rates, the mortgage world gets excited because you expect that to get passed along in that world. But the comment about it's a structural issue for Canada, that is absolutely correct. And the central bank cannot fix that. That's really, we have to undo all of these crazy policies that were, implemented by our government over the last number of years now. But in between the lines, if you look at the different charts they have in their chart pack, where they're trying to show what growth is going to be like, and they have a couple of them in there. They're not calling for recession, but they're calling for, remember, they had to be optimistic with everything because they can't come out and say, oh, the house is on fire, we're screwed. They can't do that. So that's why they do want to sound a little bit hawkish, if that's what people heard. But instead, they're saying, best case scenario, Canada's economy is going to grow, what do they have, 1.6, 1.7, I think, over the next couple of years.
1.1 in 2026 and 1.6 in 2027.
Yeah, I think that's so even if that's happening as an example, if you could, so what was growth over the last 5 years? Exclude the big, quarter to quarter dip, COVID.
Oh, very strong because we had 2% population growth.
Yeah, absolutely. So if all of a sudden, if we're at like say 2.5, 3% economic growth for a number of years, and now we drop down to 1.6 and 1.1, something like that, and again, that's the best case scenario, Steve. Like that doesn't work either, because all of a sudden there's not enough growth across the country to bring in enough tax revenue for governments to feed into their budgets and so forth. So this is going to create even harsher economic conditions. I don't say that Canada is creating it, but they are acknowledging, if you understand what's happening here. And again, we talk about it all the time. We're always looking for trends elsewhere around the world. And Steve, you keep bringing up, layoffs, job announcements, stuff like that coming up. This is telling me they're going to have another, when they have their next update, I guess that year end, is that right, Rich?
December 10th.
Yeah.
Yeah, again, not a lot can change in 1 month, really. But if the layoff announcements do continue, and by the way, this whole report, if you read, there's only one problem that they say is wrong with Canada and the world.
Go on.
It was, tariffs all over the place,
which is ridiculous.
Everything,
by the way.
yeah, every single paragraph. You blame the guy down south of the border. And so they're doing, they're deflecting. On one hand, they're saying we have structural problems, which is saying, hey, we screwed this up ourselves domestically within Canada. But when you say we have structural problems, nobody has a clue what that means. No one reads this report anyway, except for us. But the media will pick up, hey, this tariffs are causing this, tariffs are causing that. The media will pick that up. So, that's what this so-called trade war that's developing. And Steve, I know you want to talk about some of the commercials, I think, that are popping up and things from within Canada. Again, for everyone, the Bank of Canada meeting really went exactly as the way we thought it would. And now it's going to feed into, the budget for next week. But again, this is, we don't have a great outcome here coming up.
But Keith, just to be devil's advocate here, like the tariffs have obviously had a significant impact on certain sectors. So we can't ignore that. Just to be very clear, because I can already sense the comments section saying we're being flippant about it. The private sector employment that are sectors that are heavily reliant on exports to the United States have fallen. That's obvious, and so has exports in aluminum and obviously industrial machinery and equipment related to those sectors. I get it, but to your point, Keith, it totally glosses over the 10 years of structural decline that we've had, and those tariffs have only been in place for 6 months, and so that's the part where I agree with you completely. But on chart 7, you can see, maybe we can share it. You can see that.
Yeah, Rich, I'm looking at it right now.
Yeah, private sector employment with limited reliance on exports to the United States is basically flat over this year, or slightly up. Obviously, public sector employment is up because they love increasing public sector employment. But yeah, it doesn't address any of the productivity issues. Obviously, on and on. Steve, I know you want to switch gears, so I'll let you.
Well, no, I was just going to chime in. I just noticed, there's a good quote from Tiff Macklem that basically said, if the economy evolves roughly in line with the outlook, the governing council sees the current policy rate at about the right level to keep inflation close to 2% while helping the economy through this period of structural adjustment. So, again, like their view today is at about the right level. So Keith, I don't know. Obviously there's so much that can happen in the economy, but currently if you're looking at like market odds for December 10th, Rich, they're like about 10% of a rate cut.
Nothing, no cut basically, right?
No cut. And then what is it? 35% for next year, right? I don't even think there's no cut currently priced in for next year.
So that's it. We're done. If you look at, and that's what the OIS market is saying, that we're basically done. And now, of course, that could change clearly. These are not static. But for now, that's what it says.
Keith, I'm assuming your viewpoint would be, let's watch and let's see, but this is likely to change.
Yeah, we're talking charts now. So go to chart 19, children.
I love charts. I love charts. Come on.
Yeah, I know. So everyone, turn to page 33 of your textbook, chart 19. For those without their book, look at your the dude sitting next to you. But it shows GDP growth, you know, from 24 to 25. And then they're showing what they're estimating is going to look like for next year and the year after. And of course, over the last 2 years, you have, you know, a lot of volatility, jagged lines and stuff like that, between what actually happened versus the forecast. But for the next 2 years, you know, they're forecasting GDP growth to be in this, you know, 1.5 to 1.7% range, you know, very flattish. And, you know, my view of this, you know, and again, I have a negative view on it, and it will become positive at some point when it needs to be. People don't want to hear this, but so far we've been correct with this view on where Canada is going. I think it's highly unlikely Canada and the world is going to experience stagnant growth over the next 2 years. And that's because the conditions are set up for something to break in the financial system. That's it. And then when something breaks, it means people can't get credit, or it's a lot more expensive to get credit and to borrow. So again, central banks are never going to show you a forecast growth with a recession built in or anything like that. But they're telling you, hey, growth is going to be weaker because population growth has fallen. Growth is weaker because of the tariff war. Tariff war is not going away. Tariffs are the cost for trading with the Americans is absolutely going to be higher than what it was 2 years ago. You know, you have to adapt to it. The Europeans are really struggling. Japan is struggling. China is struggling. So again, the only way for this like positive, muted, stable growth experience to occur is not going to be from organic demand. It's going to be like excessive borrowing. You know, that this concept we talked about last week, I think, yeah, I was in Vancouver. You know, the global economy today in 2025, you know, it's in a constant state of a need of stimulus to survive. The moment stimulus slows, it doesn't work anymore. And you know, we were going down that cycle again. So everything Bank of Canada said yesterday is accurate. Again, I know their forecast, they cannot show what Keith thinks is going to happen, because that will scare the crap out of people. But again, the trend continues in that direction, and we'll continue to get more information as we go here.
Keith, it's funny. One of the reporters actually asked Tiff and Carolyn Rogers their question at the end, which was if they're worried or concerned or watching the AI bubble as a potential risk, right? I mean, like, I think we can all admit it's a bubble. It's just a matter of like when it pops. And what does that do to your, for example, your trajectory for interest rates?
It's kind of, Rich and I, we were talking about this concept for the day. We were chatting with a gentleman in Vancouver. Is AI a bubble? And I think you have to differentiate between AI, the technology, what it's going to do to help the world and the economy, and then AI financial markets, because I think it's two different things. I mean, I think what you're referring to, of course, you know, the financial market related instruments, you know, whether it's
I was
underlying
NVIDIA
stocks
just hit $5 trillion market cap.
Yeah, I think it's more valuable
First
now
ever.
than British Columbia, probably because of the housing problem. But yeah, the financial market side of it, you know, I mean, obviously you can make an argument. Maybe it's a little bit overvalued from what it used to be. The technology side, you know, because you guys don't remember, but I remember when the internet, you know, Y2K, all that stuff was going. People trying to choose who's going to be the winner and who isn't. At the end of the day, the winner was the world.
Mm-hmm.
You know, it just made everything so much easier and better to use. And there were a lot of winners, you know, feeding through that, and a lot of losers and everything. So one of the biggest winners back in those days was Cisco Systems. You couldn't hold enough of this stock. I have no idea where it trades today. Use your magic machine, Rich. Where's
oh boy.
You don't even know the ticker symbol for Charlie Sierra. But that's the point though with AI, and you know it's going to have a lot of sort of this creative destruction theme that people are aware of. It's attracting a lot of capital, you know, coming in. What?
It's back to its 2001 high.
Okay, yeah. So that's
It
the,
took
Almost
25 years, almost. That's kind of
25
But if
years.
you look
no
at the
growth.
price of that stock back in say '96,
yeah.
what was it then relative
No,
to
so
its
Keith,
high?
I'll tell you right now, it peaked at $77 in March of 2000, and today it says it's $72.
And what
kinda
was it in
cool.
'96? Are you back in?
Oh,
Remember that
90,
thing had like a gazillion stock splits leading up to that point.
96, it was like $6,
Yeah,
$7.
so that's a pretty good ride back then. But
Yeah.
yeah, but that's where we are, right? So I mean, I think though what you're looking at, Steve, like what kind of contribution is it going to have to the global economy? You know,
Yeah.
it's going to have an enormous. Like we're already seeing it now when
Yeah.
you know when you're using.
I wanted to point out one more thing from the BOC. We joked about it last week on the pod, which was the Canada's CPI inflation, that report that came out and
Yeah.
highlighting that rents in Canada were accelerating to the upside. Like the 3-month annualized rent growth was like 6.5% or something like that, which is totally ridiculous because everybody knows the rental market's really weak across most major metros. But I also noticed the BOC flagged a noticeable pickup in residential investment, which again, I don't know what they're looking at.
Well, they're
But-
looking at quarterly series. It's
Yeah,
just like
I
a
mean,
quarterly from the national income accounts.
and that to me, that just feels like a total head fake. I am not seeing anything whatsoever. Like it's, and then I look at the headline that came out, yesterday. Only 53 new condo units sold in Toronto in September. There was 155 condo units sold across the entire GTA. That's down 90% from last year. Or sorry, 90% below the 10-year average. So like there's effectively like no new condo sales whatsoever.
And see, the Bank of Canada are obviously aware of this. You know, they're not getting it from the news that comes out. You know, they're speaking with the banks all the time. And, you have this cut, which everyone was expecting. I just suspect that anyone thinking that's the last cut is now going to stay flat for a while, and then we'll go higher maybe. The only time the Bank of Canada is going to be increasing rates is to protect the dollar. That's where we're going.
They did flag a weakening currency there, Rich.
I mean, that's the thing that they're like. That's the thing that's like left unsaid. I think one of the journalists. By the way, I'll give credit to the journalists. Since we started giving them shit about 18 months ago about the crappy questions, they've actually really improved. I have to say, we like over the last like 6 months, the questions are getting much better. One of the things that they don't ask, or they always flirt with, and then Carolyn Rogers has to parry these conversations, because is the what's the effect on the currency, and then of course Tiff and Carolyn say, well, we never target or look at the currency. But I think that's, Keith, to dovetail off of your point, I think that's sort of the unspoken fear, which is the Canadian dollar continues to fall against all major European currencies. It's now rolling over against the US dollar. And if we continue to have weak growth, capital flight, which we are, lack of clarity on investment, budgets that are wildly unhinged from reality, and people continue to sell the Canadian dollar, that will impact inflation eventually, because as people who listen to us regularly know, we export oil and import consumer goods. And those consumer goods clearly are priced in dollars. And if dollars go down, then those prices go up, and that leads to inflation. And so I think that's the thing that I'm really, really keen on over the next little while. If the Canadian dollar continues to fall, mind you, did have a decent day because of the hawkishness. Well, the lack of dovishness from Tiff. I think it'll be really interesting to see how that fleshes out going forward.
I was going to flag one other. Go ahead, Keith.
Yeah, just the last. I mean, okay. Next one, children, turn to page 37 of your textbook.
Wait. I'm going.
37, and at the top of the page is chart 22.
Okay.
So for everyone, it's showing consumption growth expectations for the next 2 years. So, a few minutes ago, we we're talking about how growth expectations is pretty flattish. And that's what this chart is showing as well. But it's showing the, per capita consumption. And, obviously that's a function of how much families are spending and what's happening with population growth and so forth. But this low level, so for everyone to understand, back in 23 and 24, these numbers were a lot higher than what's being priced in the next 2 years. If we have muted household consumption over the next 2 years, then again, by default, it's going to mean less economic activity, less tax revenue coming in, even bigger deficit, and so forth. So the Bank of Canada will have to cut rates even more to just try to maintain this muted level of expectations. It's very clear if you look at that page and chart.
Yes. Just quickly on the mortgage front, then for all our mortgage renewal people in 25 and 26. So your prime rate came down to 4.45, which is the lowest I think since June of 2022. That would bring most variables, because you have your bank discount on top of that, bring most variables to about 3.75 today. Now, again, keep in mind that discount I think should probably grow, to be honest. But it's at 3.75, Keith. So basically what I'm saying is, like, if you're shopping for a mortgage coming up, you can take a variable at 3.75, or you can take a 3-year or a 5-year, because they're effectively the same numbers today, at 3.99. So do you float it at 3.75, or do you lock it in at 3.99 for, call it, 5 years? Those are effectively your options today.
Is that a rhetorical question, or are you asking me what?
Well, you don't need to answer that. But I mean, I suppose if your view is, hey, listen, the market's saying no more cuts, but something's going to go awry, they'll probably end up cutting anyways. Variable might not be a bad choice, but obviously I think there's been a lot of people that have been burned on that and might not want to touch the stove again.
I would just sell it and move to Texas, man. What else we have? I think, speaking of Texas, the Americans had their
Fed
central bank meeting yesterday as well. What did you guys see with that one?
Well, Keith, you follow that one closer than I do, so I'd be curious your thoughts.
The big thing that jumps out from the headline news is that they did cut rates, and that was completely expected. And then two other things that were unexpected happened. One maybe less than other, but QT is now over, quantitative tightening, which means now they're going to quantitative.
Is it official?
Yeah, it's going to run off shortly here. And we talked about that. We said, hey, if you're cutting rates, you can't do QT at the same time, because one is trying to ease, the other one is kind of trying to tighten. It just doesn't work. So again, it makes perfect sense. We'll have a deeper conversation on this coming up, but that's really going to wreak havoc in the repo market, and because now what's going to mean is going to be less collateral available, so which is going to spike what people will have to pay to borrow coming up. But the other one that was really interesting is that out of all the lads that voted, 2 were in disagreement with the 25 basis point cut. So you had the new guy who wanted 50. So that's the same as before. I don't remember his name, Steve. You always dig out the name. It's irrelevant, but it's the new guy. Yeah. But the other one was different. And he didn't think there should be any cut whatsoever. So this is now all of a sudden the first time there was a bit of a hawkish, Rich, this would be a hawkish cut if you want to think of it that way. And then the rhetoric, of course, from Powell was kind of in that range as well. So the market reaction yesterday was a hawkish reaction for the U.S. dollar, which meant the U.S. dollar appreciated versus all other currencies, including CAD. And but that wasn't expected, during the presser. But that was the big thing that jumped out when I was following it. Did you guys see something a bit more interesting as well,
Rich?
No, I just think, to me, it's just again this idea that, I mean, we're seeing it everywhere. I think it's just that I've mentioned this before, and I'll say it again. But 3 is the new 2, so you're still getting inflation at much higher levels, and yet they're still trying to ease. And I think that's just like indicative of where we're going across the world. Budget deficits exploding. central banks trying to be accommodative. Remember that the U.S., just like Canada, has about 30% of their debt that needs to be rolled over the next 1 or 2 years. I can't remember exactly what it is for the U.S., but it's a lot of debt. And it's going to be done at the front end of the curve, which is why there's so much pressure from the White House on the Federal Reserve to cut interest rates.
Is that renewal wall, for example, for the U.S., is that predominantly in the next 12 months, 18 months, 24 months? Like what's the bulk of it? Like,
I can tell you exactly what it is. If you just
you're right, because they're going to want rates, for example, ideally, lower 18 months from now. Like today, obviously, they're moving in the right direction for them, but
yeah, I mean, it's basically like, I don't know the exact. Sorry, I'm struggling to find the actual chart here, but it's about 30%. I think it's 35%,
which is a large. I'm assuming that historically is a large number for them.
Yeah. And it's different than other countries, like we talked about before. Like European countries have a very uniform distribution. They have other problems, but their debt maturity wall is extremely uniform. But Canada and the US, all their debt is right up in the next sort of 12 to 18, 24 months.
Do you remember what Canada's was off the top of your head or no?
Yeah, it was about 500 billion. The last time I looked at it was 492. That was a week or two ago.
What's the percentage of?
It's like 30%.
Okay, so it's about the same as the US.
Yeah,
so they're basically in line with the US.
Yeah.
But the difference so again, just for everyone to know, like when you have to roll over your debt, doesn't matter if you're the Canadians or the Americans. So if I'm a pension fund and I've held this bond when it was first issued 10 years ago, it's going to mature. As soon as it matures, Ottawa pays me my money back. I will immediately buy the next bond that Ottawa issues. And the only difference is that I'm now going to get a higher yield on it than I did before. And Ottawa has to pay more in interest to do it. So they will need some net new buyers coming in, but it's not this incredibly like, oh, wow, we have to sell 500 billion in bonds coming up. Who's going to buy them? Most of it is going to be bought anyway. That's just the way that the industry works. The U.S. situation is different. It's even more positive for the Americans. And it's because of this whole repo market sort of funding squeeze that's going to happen. So the demand for U.S. Treasuries, which is what's used for collateral in the repo world, it's going to go sky high. It's going to increase significantly. So I don't think the Americans are going to have trouble, funding what they have coming up, even though it's a big number, but everyone has a big number. But it is something we have to watch. Instead, you're going to look for, there could be a bank or financial institution or in the shadow banking world, like a hedge fund or something like that. Like they're not able to get the collateral they need. And then they're not able to borrow or something. But that's where we're headed, because that's what the central banks are telling us. Bank of Canada, we're cutting rates because things are getting crappy. The Americans, we're cutting rates. Things are great, but they're also getting crappy. And the Europeans, we're not going to cut rates, but the only reason inflation is low because energy prices have come down.
Yeah.
Things are getting crappy. The Bank of Japan also met today as well. And the only reason they didn't cut rates is, they don't have any rates left to cut. So everything continues to go down that same path.
What are so we know the Bank of Canada market odds currently are effectively no more cuts this year or next year. Where's the Fed at, Rich? Like what are markets pricing in right now?
So there is a 71% probability of a rate cut on December 10th,
which Powell obviously has pushed back on.
Yeah, I mean that's just what the probability distribute. That's what the Fed fund.
But what is do you know what next year looks like?
Next year, it's just like cuts basically. January 81, March 87, September 90. I mean, it's yeah.
Which again, Keith, I'm just spitballing here, but to me that seems obviously something doesn't add up. Which is to say, you got the Americans cutting aggressively next year, but the BOC not cutting at all. To me, those two don't really line up.
Yeah, I agree with you as well. So either the Americans don't cut as much as what the market is saying right now, or everyone else continues to cut. So this spread will maintain its way on the way down.
Just to give you an idea. Oh, sorry. One quickly, just people to understand like the terminal rate, which is again, the terminal rate means just sort of like where's the end game? We're at a certain level now. We're gonna cut. Where do we end up? And for the U.S., about 3%. That's what the market says. Sorry, Steve, you were going to say something.
Well, I was going to say what we really need is we need a tariff agreement.
Yeah, well, that's the. If only.
Doug Ford's got to stop doing radio ads.
That's crazy. Can we talk about that for a second?
Yeah.
We,
So
go. Sorry.
Yeah. So I mean, I'm sure people know what's going on, but obviously, the Ontario government, Doug Ford, spent $75 million promoting ads in the United States around, and basically, effectively, they were anti-tariff ads. And then immediately, of course, Trump came out and says, we've halted all negotiations with Canada. And actually, I think he actually raised tariffs. I'm trying to keep track of it all, but he actually raised tariffs. So then was it like a day or two later, Doug Ford says, okay, we're gonna pause all the ads. We're canceling them now. But he said mission accomplished, apparently.
It's like George Bush on the aircraft carrier when he has the giant mission accomplished banner, and then they're like still stuck in that quagmire for like 10 years later. Hopefully it won't take 10 years to create a trade deal.
So he spent, you say 70 million?
70, it was 75 million they spent.
Yeah.
Only to basically quash any progress we had made, apparently. Whether we actually made progress or not is.
Yeah, you have to ask yourself whether they want progress or not. I mean, the Trump thing, I know, maybe I've gotten some of this wrong. Some of it I've gotten right. It just seems to me if Ottawa wanted a deal, a deal could be made. There's loads of countries that have made deals with the guy. Just a couple months ago, over the summer, Ursula von der, whatever her name is, from the EU, she made a deal with the United States. Japan's made a deal. India, Mexico, and Canada's the only one. And I think it's because it's extremely politically expedient for the current government to blame all of our problems on this guy in the South. And of course, it's affecting many industries in Canada. I'm not going to say that, but it's unclear to me that they want a deal. But
well, I guess where you start, like, it's hard to agree with that because, like, man, can people really be that
cynical?
Maybe, but I mean, the one thing I was like, so Doug Ford clearly screwed everything up, but then David Eby came out.
Is this Halloween or April Fools? Like, did he really spend 70 million?
75.
75. Have you ever been in the US and seen like local US TV commercials?
Yeah.
During election?
Yeah. It's
oh my
crazy.
God. You become totally desensitized to all this crap that comes out. And man, that's 75 million.
Keith,
that's
as this all played out and everyone's like, whoa, stop the ads. Like, you just, we're screwing this all up. David Eby announced BC's to launch their own anti-tariff ads as Ontario pauses their controversial campaign. So I don't know, it's just weird. Like, you see all this playing out and everyone's all like, oh man, maybe that wasn't a good idea. And then like a day or two later, the guy in BC is like, yeah, we should do that.
Who's advising these turkeys, man? Like that's that's.
But I think, but the problem is, Keith. In a way, I kind of get it. It's worked for them. Like, it's worked. It's this idea that it's like tough talk. You got to stand up to Donald Trump, and
you think it's given like more of a power grab?
I think it's worked. It worked in April. Elbows up.
No, but to be clear, Rich, you mean politically? It's
Excuse me.
It has not worked any other way in the real world.
Yeah,
it's had no value.
Yeah. I mean, the question is, as Canadians, this is maybe a conversation for when we have, we're going to have a person, sort of an expert in the auto industry, come on over the next couple of weeks. So stay tuned for that. And this is a question for him, but like, if the United States wants Canada's auto sector, okay. I mean, the question is, should Canada even be in the auto sector? I mean, Australia used to have an auto sector. If you're familiar with the company called Holden, they used to make, and then it was purchased by Ford, and Australia basically eventually no longer built cars. I mean, they build all kinds of other things. They have a huge and very successful natural resource sector and mining and processing materials and refining natural gas and all these other things. The question is, to what end, like, what is the strategic aim and why do we need it? So I get from a political standpoint, like Doug Ford is to stand up for his auto sector in Southern Ontario. Well, more broadly speaking, is this benefiting Canada? I think a bad deal, and I've said this before, a bad deal is much better than no deal, because at least a bad deal can be negotiated by the private sector. They can understand, they have some clarity. They can, we can do things on our end. We can cut taxes, reduce regulation, encourage foreign invest in but this perpetual cycle of, Mark Carney's the good guy to defend Canada's interest. Meanwhile, nothing gets done and our economy continues to hemorrhage capital. That's unclear, but I know I'm biased. So Keith, I don't know if you have a...
No, I'm but we are getting teed up perfectly for the most anticipated event of the year for Canada.
You mean Game 7 of World Series?
Actually, that's gonna be a lot of fun. It will be a lot of fun. No, I mean the budget, of course. I mean, we sort of danced around it, but we'll have a lot of coverage of that next week. And so that's really going to it's going to be a confusing conversation, an exciting, thrilling, spooktacular conversation at the same time. And I think then, all this sort of Bank of Canada talk will kind of make a lot more sense as well. And it is going to lay the groundwork for the Bank of Canada to do these sort of, remember, don't listen to what they say, sort of see what they're doing. So you can see them cutting again, of course, it's coming up because they have to. They have to.
Speaking of upcoming events, COP30, United Nations Climate Change Conference, is coming up on Monday, November 10th. Ahead of that, there was an interesting article that was penned by Bill Gates, who's really been leading the charge on, climate change and green energy. And like, that's his whole sort of shtick. And he's really been almost like the father figure for that industry in that space. And so he penned this long article on his website that was gaining a lot of media attention, where he says, quote, "The doomsday outlook is causing much of the climate community to focus too much on near-term emissions goals, diverting resources from the most effective things we should be doing to improve life in a warming world." Rich, I know that you and I were chatting about it off the air, but is there anything that really stood out to you other than
shifting away from we're all gonna die to maybe we're not all gonna die? I think this is a major sea change. I think in a way you could argue that it was coming, and that Bill Gates, who's a very clever guy, sort of saw the writing on the wall and doesn't want to be left out. But I think what's also really encouraging and is that to put a positive spin, is sort of the emphasis on the human condition, rather than and a move away from this climate nihilism, this idea that if we don't do this one specific act, we're all going to die, rather than let's divert our resources to improving the standard of living of everyday people. And to me, that is a much more positive message. Again, maybe Keith, I'm not being cynical enough, but just to be more positive about it, I thought it was really important. He said, although he said, just to reiterate from his letter, although climate change will have serious consequences, particularly for people in the poorest countries, it will not lead to humanity's demise. People will be able to live and thrive in most places on Earth for the foreseeable future. Emissions projections have gone down, and with the right policies and investments, innovation will allow us to drive emissions down much further. And that's, I think, a mega change in view from the grand poobah, the Pope of climate change. And I think that will, and then I think hopefully, if we're bringing it back to Canada, will provide some cover politically for the Canadian government to basically change its rather stupid policies around pipelines and natural gas and mining and et cetera, et cetera.
So Rich, to that point, there's, if you go through the rest of his letter, remember we talked about the Net Zero Banking Alliance, which was actually created by Mark Carney, or creator. He was on the board. He basically
No, it was his shtick.
Okay, it was his shtick. Anyways, it's effectively been dismembered. So most of it's all kind of gone quietly to the side. But Bill Gates says, quote, "Sometimes the pressure comes from outsiders. For example, multilateral lenders have been pushed by wealthy shareholders to stop financing fossil fuel projects with the hope of limiting emissions by leaving oil, gas, and coal in the ground. This pressure has had almost no impact on global emissions, but has made it harder for low-income countries to get low-interest loans for power plants that would bring reliable electricity to their homes, schools, and health clinics. And he goes on to say, which, Rich, I think you've been hammering this point home for a long time. He says, a few years ago, researchers at the University of Chicago's Climate Impact Lab ran a thought experiment. What happens to the number of projected deaths from climate change when you account for the expected economic growth of low income countries over the rest of this century? The answer? It falls by more than 50%. This finding is exciting because it suggests a way forward. Since the economic growth that's projected for poor countries will reduce climate deaths by half, it follows that faster and more expansive growth will reduce deaths by even more. And economic growth is closely tied to public health. So the faster people become prosperous and healthy, the more lives we can save.
I mean, amen to that.
So guys, again, is this April Fool's Day?
No.
In my opinion, I know we started talking about the Bank of Canada and everything else first. In my opinion, this was the most significant announcement of any kind we've heard over the last number of years. Like, this thing is just extraordinary. And I don't follow the mainstream medias, but was this getting coverage in the papers?
I think it got a little. I mean, Twitter obviously picked it up, but like maybe we'll put a link in the show notes. I actually think it's a really good article. It's a great read. There's some good charts and graphs, and
you should put it in the show notes.
I think it's well laid out.
It is the most important. So what I mean, like, so people that know me, I have some pretty strong views on this stuff, and all of my views, they're now being confirmed based on the conclusion from this letter from Gates. I mean, they were trying to get people to eat fake meat. That was big. They were going, yeah, it sounds funny, but that's where, the Beyond Meat stuff, hey? Like, they're literally going to call the cows in Europe because they were farting, to going down that route. This net zero nonsense that Canada's been fully committed to. And if you questioned any of this over the last number of years, you were called uneducated, you were a science denying whatever you want to put it in front of it. You weren't even allowed to, on YouTube, you get a big warning. Yeah. You weren't allowed to. So now here's this guy who is really, people may not understand. People might think, oh, Bill Gates, the Microsoft guy. But if you don't know or you're unaware, he has all the money in the world. He is one of the most powerful humans on the planet. And he was one of the driving forces behind this view or trend. And so a couple of things for him to come out with that. It now has people like us. Hey, we're validating. Yeah, we were right. It's great. So it's very interesting. And now we're saying, okay, does that mean Ottawa's going to change their view on things?
Yes.
Are they? I don't know how they do it. It's going to take a very long time to turn that ship, and we'll see what happens with it. But when people say, "Hey, anything good happening for Canada?" Because they have the emissions cap. If they come out tomorrow or in the budget and they go, "Yeah, you know what? You can produce whatever you want. We're going to remove the cap, or actually, don't worry about the cap. We're going to extend it up beyond here." Then it means, yeah, it is having a very positive effect. So it's a very good and weird announcement that came out from Gates. I suspect you're going to find out there are other things attached to it. And, we've talked about it offline. We won't go on with it here until the Loonie Hour is right again. Right, Rich? But there's obviously something very significant going on. But again, this whole view about net zero emissions and entire generations of our youth have been captured by it, and that's all they believe and they go with and how living their lives. And it was based on what was coming out of the money from Gates. Now he stopped it dead in his tracks. He's saying, hey, actually, the best way to cure or raise, lower income households and fix poverty and disease, improve health, it's not through the climate science. It's from good old capitalism. Let's make people more prosperous.
True.
So Keith, the point that you're making as well, as he touches on, is like there is a cost to net zero, right?
Yeah,
or these green premiums. So he actually says, one of the goals should still be to drive down the green premium to zero. But he gives a chart which effectively shows that, if you're looking at 1 ton of cement, well, if you want 1 ton of cement after carbon capture, that's 131% more costly. 1 ton of steel or 1 ton of steel after carbon capture is 28% more expensive. Conventional jet fuel, or do you want 1 gallon of sustainable jet fuel? That's 317% more expensive. So like the challenge is like when everyone is dealing with the cost of living crisis, and you have all these, poor people in other parts of the world that, can't afford air conditioning, for example, and, starving them of fossil fuels, for example, is ultimately what's resulting in more deaths over there.
It's also morally bankrupt. It's
Yeah.
insane. The truth is, like, and I'm really happy we called this a lie from the beginning. The idea that human beings are going to stop consuming fossil fuels has always been a lie. The fact that net zero was going to be costless or that it would be cheaper, again, is a lie. Eventually, maybe renewable energy will be ubiquitous. I think we're a long way from there. Not suggesting that we shouldn't fight for it. But one of the sentences that really struck me when I read this paper was, for a few years ago, the government of one low-income country set out to cut emissions by banning synthetic fertilizers. Farmers' yields plummeted, and there was much less food available, and prices skyrocketed. The country was hit by a crisis because the government valued reducing emissions above other important things. Remind me if you've heard that before. And what people don't get
country was it? Which country was
it? It was Indonesia, but I don't. He doesn't actually specify it specifically, but my guess is that it was either Indonesia or Bangladesh. I can't remember which one they did. But like that's it. Really, I mean, like, remember a couple years ago there was the farmer protests in the Netherlands about part of it had to do with the use of fertilizer. In the 1930s, a Nazi invented the Haber-Bosch process, which uses nitrogen through natural gas. Sorry, they use natural gas to create nitrates in order to artificially fertilize land. He was a Nazi sympathizer, and he was given medals by Adolf Hitler, etc. But be that as it may, he created what's known as the Haber-Bosch process, and that was the ability to turn natural gas into nitrates, which is what you use to fertilize, basically industrial fertilizer, and to improve crop yields on a mega scale. So even though that guy was not a nice guy, he created what was one of the single most important things for humanity, which was the ability to industrially improve, for like basically fertilize enormous tracts of land very, very quickly and easily, effectively. And so like you cannot do that without natural gas and fossil fuels. And so like it's really sort of all coming full circle. Like, and I think what, again, Keith, you're not going to like this, but I give Bill Gates credit, man. Like he is the person that can like sort of absolve us and like, allow humanity to go forward. And by saying this, he's basically giving Canada and the Canadian politicians and all these untractable people permission to change their view.
So it sort of ties in with, back to the Bank of Canada monetary report.
Mm-hmm.
There was one line in there, and I thought you would pick up on it, Rich, or Steve as well. I'm just going by memory. So the removal of the carbon tax helped to reduce inflation.
Yeah.
Did you see that in there?
Yeah, they've been talking about it for months.
Yeah, absolutely. So it's in there again, of course. So now maybe in the budget that comes out, maybe they'll remove the industrial carbon tax.
Yeah.
So it's again this whole Bill Gates thing it's extraordinarily weird. It's providing a lot of hope. You know how you feel about hope sometimes, but this could be a very pivotal moment for Canada, because it now gives Ottawa the opportunity to pivot. And that pivot is by, moving away from these, carbon initiatives and so forth, which is really just a tax on low income families. at the end of the day. I mean, that's what it is. So maybe this is in the place for blast off. Maybe Canada does, do incredibly well. The one area around the world which is going to be kind of very difficult to pivot is Europe. So I don't know how they feel about Bill Gates now this morning with this coming out, but we'll see where we go with it. But Ottawa, we know you're listening. This is an incredible opportunity to make a pivot and make the country better. I have support for it.
Well, I mean, effectively, we've been arguing that Canada has a moral obligation, right, to harness our abundant and ethically sourced oil and gas to the rest of the world.
Wait, I need to correct myself.
Suffering from low energy and poverty.
I need to correct myself. The Haber-Bosch, sorry, they were not, those two guys were not Nazi sympathizers. They were used by, that process was used by the Nazis. Sorry, that's very, very important correction. Very, very important. But anyway, sorry. I'm looking it up now.
Rich,
sorry, Steve. I just wanted to make sure.
You've been vindicated.
Yeah, I have been vindicated. I mean, it's really incredible. That learning about that process is really, like, honestly, it changed the world. It's really, really fundamental to our agricultural and Canada, by the way, has an important part to play in that. That's what's crazy, right? We can produce natural gas in an ethically and sustainable way and provide that to the rest of the world. And I think that's.
Rich, it was actually crazy. Just like, again, just reading his article, because I just think about it like here in Canada, where we have like, we have all these, forest fires in the media and everything. The challenge of the climate change stuff is like, everything now is climate change, right? It's like, oh, well, every storm it's climate change. Every fire is climate, like as if we we didn't have them before. But like Bill Gates actually goes on to put a note in here that basically shows like you're actually seeing fewer and fewer. For example, I think it was forest fires that he put in here. But he's like, you wouldn't, you obviously wouldn't know that based on, for example, reporting, because I think what's happening is like you're trying to effectively scare the population into the world is coming to an end.
Yeah.
Well, it is fact. There are more forest fires now than the early 80s. However, the early 80s was the absolute low measurement point for forest fires. So if you look at the overall chart, you probably find this one online. It's from a high number, and the chart goes vertical down, and now it's starting to trickle higher. Yeah. So it's that one of these, you pick your start or ending point. But I'm glad Gates is bringing all this up, Steve. And again, our view is that, hey, maybe this is a great opportunity for Canada, to do the pivot. But overriding, just to sort of bring it back for everyone to appreciate, the Americans cut rates because they feel things are getting a bit more sluggish. Canada cut rates for the same reason. The Europeans did not cut rates, but they fully acknowledge that they're on a meeting-to-meeting schedule now with whether they're going to cut again. Japan has no rates left to cut, but they basically said, hey, we're going to let the yen go. So if anyone wants to take a look at the Japanese yen these days, it's now not doing very well. And then, Rich, we have the Bank of England. Where are they coming up in November, I think?
Yeah, I can check really quickly. I think it's in November.
And they have their own challenges. I think I saw the other day that now strategists are expecting the Bank of England to start raising rates next year. So, either they're going to be very wrong, like the Bank of Canada was back in 2019.
No, there's no, sorry to interrupt you, but there's no hikes priced in. But
this is from economists then, maybe economists.
Sorry.
Yeah, not in the marketplace. So the world continues to go where we're headed.
I want everybody to go and look up this Fritz Jacob Haber. He was born in 1868, who won a Nobel Prize in chemistry. He invented the Haber process. That guy was incredible. Not a Nazi sympathizer. Loads of his family died in the concentration camp. Sorry, I screwed that up. But he was a German nationalist, obviously, and that thing changed the world. And our life, the way we live it today, is based on fossil fuels. Sorry, I screwed that up, Mr. Haber. I apologize for that.
We'll get him on. That's a guess.
We'll get him on. I'm afraid he died in 1934 in Basel, Switzerland. But that thing is incredible. If you ever really want to go down a Wikipedia rabbit hole, go read about the Harbor Bosch process and how it changed the world.
Steve, do you want to mention any of the job cuts that have been sort of being announced?
No, not really. I think it's a good place to wrap it up. We've got the federal budget's next week, November 4th. I think we're working on a couple of guests here. We'll probably have somebody on just to sort of help us parse through the budget. So again, the budget will be released next Tuesday. Obviously, we record on Thursday, podcast out on Friday. So we should have some good coverage on that. I think it's incredibly important. There's a lot of anticipation leading up to it. But yeah, I think that's a great place to leave it. As always, guys, we appreciate the support, and we'll see you next week.